Okay, welcome back. Samir Arora is with us, fund manager at Helios. Samir, we were talking about the entire Adani saga. With the FPO being pulled out, what is your view right now on the situation?
So just to let the background, my thinking is that the management was poorly advised in trying to, in a sense, ram in the FPO at the original price. After last Sunday, my expectation was that they would cut the price by some whatever 7, 8, 10%, and that would have allowed people who anyway believe in that Adani Group or the Indian funds or whoever to have applied. But when you have a clear difference of 10, 15% between the traded price and the FPO price, obviously it could not be rammed through. So I think today it's not such a bad deal to have cancelled it from their point of view. We own Gujarat Abuja, which we think is a separate asset, and we bought it only on Monday, by the way, and very easy to sell in theory if there was any liquidity issue. But big picture, we have all got involved because the banks have exposure, but we really don't believe that they don't have enough assets. The valuation or the high valuation was on the equity markets rather than to say that they can't, refinance their bonds or whatever. In any case, whatever stuff they have put out shows that they don't even have major bond repayment or any bond repayment this year. It's some 2 odd billion for the whole group in 24. So as of now, obviously the market will be down today, tomorrow, or maybe today, or maybe half day. But I think the event is in some sense over. But they have to explain.
Okay. Samir, yeah, good to hear that actually. I don't think liquidity or solvency issues are a worry now, everyone, as you say. And nor are there any worries about, the bank's overexposure in India. But will this linger in the foreign mind as, already India's valuations are high and then there are these pockets of overvaluation which are not properly regulated? Do we get some, decrease in our valuations because of this image?
These are, if the market goes up, they will justify or we will justify. But before that, if you saw yesterday, Credit Suisse put out news that they will not fund their high net worth clients or whoever buying these bonds at a margin. But I called 3 other banks. In fact, I'm thinking of buying one of those bonds personally because you make some 20 odd percent in less than a year. But the point is that nobody else is either restricting or they are even giving leverage. So I think that was more to do with Credit Suisse not being able to handle any more of any mishaps because they themselves have been involved in many issues in the last. So their own risk appetite is near zero, I would say. But at least 3 other banks have told me that not only you can buy, but they will give the same margin as before. So, but that came in the middle of the market, created another round of crisis. Now, talking about foreign investors leaving India, I mean, you look at it. Let's look at this, my favorite new purchase, which is exactly 2 days old, which is Ambuja. So Ambuja was just bought in a, you can say, leverage transaction or whatever transaction, funded by 5 or 6 foreign banks. And does anybody believe that if the stock price falls from the original acquisition price, which is say 385 or whatever it was, that suddenly after 2 days, one of those 6 guys will be trying to sell his part of the shares on the screen? I mean, what a ridiculous thing for anybody to think that if the consortium of these banks own 60, 70% of the company, they will just sell and one of them will come and sell it on the screen. And we know that at that time when this acquisition happened, 2 other bidders, which was Ultratech and I think JSW and all were also willing to buy. And so in theory, if you need liquidity, you can after 1 year, 6 months, 9 months, sell it to the next guy if so required. But to say, oh my God, there's a margin, there is selling. So if you also see on the other stocks in which we don't have interest in all the Adani Energy and in that other, whatever, green and all. But if you see the amount of this margin exposure is very, very low. Adani I'm saying that the foreign investor is a panicky fellow. Last month, he was panicking out of China. This month, he might be panicking out. He goofed up there. In October, they said it is very bad. I still think China is much worse. But let them do it for 3 days, 5 days, 10 days, here or there. I don't think changes anything. Our budget was overall very good. So maybe it takes 3-4 days more or 2 days more, according to me, even by second half today, who knows, that you will say this Adani Group is not pulling down any bank or making any big this thing. Maybe their stock prices have to correct more or less, I don't know. But we move on, and all I want is that my Gujarat Mucha be okay and my banks be okay first. And secondly, of course, that nobody should bleed to death.
Okay. Samir, overall, therefore, what are the attractive pockets? Now that the market is a good 1,000 points off its highs of October, what's attractive in India? Would you buy insurance in the first place? One of the big budget casualties.
Insurance, we also have HDFC Life. We'll have to take a call today, or whenever our analysts decide. But broadly speaking, rest of it, I thought we are set. If you looked at the budget, then, the consumer, although they didn't get straight benefit, but there was some marginal benefit. In fact, there's one big story which nobody's talking. I don't know whether it's real or not, but which came in Hindu Business Line, that the gift city based guys can offer P-notes with zero capital gains to foreign investors. Imagine if that happened, which currently even Singapore and Mauritius don't have that benefit. Yeah. So there are things which we don't even realize right now. And also in the consumer sector, although there was no explicit benefit, but the fact that this is an election year means that a lot of billions of dollars will be spent in the campaigns by 540 into maybe 3 candidates per location. I mean, per constituency, into maybe they spend $2 million each or whatever. So the amount of money that will come into the consumer sector will also not be bad. And then there were no negatives. So that itself is a positive. There was fiscal consolidation. There was a bit of this thing on focus on capex. So everything in the budget was broadly fine, other than maybe this insurance thing, which is restricted to 1 or 2 stocks.
Yeah.
So that can't be the cause for anybody to feel too bad.
Samir, just coming back to you, just to kind of come back on the Adani sort of issue. So Bernstein has written a report on the pledge share declaration, and Nimesh is here with us in the studio. Nimesh, what are they saying?
Yes, Prashant. So, after the Adani FPO getting withdrawn, Bernstein has put out a note and they've looked at the scenario not only for the bonds but also for the promoter pledge shares. Now, as far as the promoter pledge share is concerned, the scenario analysis what they've done, they've looked at three different categories. One is as of 31st of March 2020, which was a pre-COVID kind of levels, and that was the pledge level of the promoter at that point in time. Then on the 31st of December 2022, which is officially disclosed data from the group. And third, the implied pledge required to gross up as of 1st of February, which is yesterday, when the stock price collapsed 30, 20, and 15%. So if you look at as far as the Adani Green is concerned, that is, if you look at the first stock, as of 31st of March 2020, the promoter pledge percentage of promoter holding was 13%. That fell to 4% as of December 2022, and with the stock price falling now, it is now inched up to 8%. That's the overall as far as Adani Green is concerned. The second stock is Adani Power. As far as Adani Power is concerned, Bernstein had no data as of 2020, but as of December 2022, the pledge would have been 25%. That is now inched up to 39% as far as Adani Power is concerned. As far as Adani Transmission is concerned, it was just 7% as of December 2022. After the stock price falling, that would now inch up to 11%. Same is the case with Adani Enterprises as well. Look at Adani Enterprise, because that's been a big talking point. As of 31st of 2020, March 2020, the promoter pledge was as 50%. That fell to almost 3% in December 2022, and now that is inched up to 5%. Similar is the case with Port as well. From 50%, it has fallen now to 17%, and now it has gone up to 30%. So, that's the scenario analysis that Bernstein has put out, that because of the sharp fall in the stock price, there has been a bit of an uptick in the implied pledge shares as far as promoter is concerned at the promoter level.
Okay, all right. Thanks a lot for that, Nimesh.
Just 1 minute. The last, Nimesh, that's the implied equivalent pledge required.
Required as of yesterday's close, given the stock price which has fallen. So, because the stock price has fallen sharply, if there was 8% which was pledged, that 8% has gone up to 13%. In case of Port, if it was 17%, now it has gone up to 30%. So, incremental, either they have to pay up the money or give more shares as pledge. Okay. That was it implies for.
Let's actually take it to Samir. Samir, this is the latest which Bernstein has put out, which Nimesh explained. Any thoughts?
That's what I was saying. I had seen this in the morning. Basically, if you see Adani Port has 30% at the yesterday's price,
Exactly.
which means it has to fall another 50, 60, 70% before anybody should feel that the pledge has become so high that all the shares are gone or something. There's a massive buffer in this. That is why I don't think that this is a big issue.
Okay, all right. Samir, just hold on to that thought. Let's also listen to what Mr. Gautam Adani had to say on the withdrawal of the FPO.
After a fully subscribed FPO, yesterday's decision of his withdrawal would have surprised many. But considering the volatility of the market seen yesterday, our board strongly felt that it would not have been morally correct to proceed with the FPO. For me, the interest of my investor is paramount and everything is secondary. Hence, to insulate the investors from potential losses, we have withdrawn the FPO. This decision will not have any impact on our existing operations as well as our future plans. We will continue to focus on timely executions and delivery of projects. The fundamentals of our company are very strong. Our balance sheet is healthy and assets robust. Once the market stabilizes, we will review our capital market strategy.
Okay, so we will revisit the story, of course, throughout the day. But let's take more advantage of Samir's views. Samir, now let's come back to the budget. And as you pointed out, the improvement in macros, the fact that Indian yields are set to go lower since the borrowing program is not very high. Does it make financials more attractive? What do you find attractive in the Indian market?
So actually, till a few days ago, we always were saying that we like financials and consumer, and we were thinking that we don't like IT. And the budget obviously did not help the IT in any way, but now the margin, it helped the other two, this thing. But right now, my number one prediction idea, which I would love to buy every day, except that's controversial, is Ambuja, because I know that at 385, the management bought it. And at that time, there were other bidders. And during this 1 year, if you've added value by, saving on power or logistics or coal handling or whatever else is needed in a cement company where the wholesale guys may not have, worked on it, that the easiest thing is to get back minimum the price which the management paid and the stocks are in a block. So
Samir, yeah, we got your point on Ambuja. Why don't you tell us what else?
I'm saying it has changed my thinking. I never buy cement in my life. I'm still not buying cement. I'm buying an event in this case. But broadly speaking, what I mean is I will still be in the financials and this thing. Of course, my financials have also got hit like State Bank. And therefore, our first effort is that are we absolutely sure that there is not really any, maybe there's some small piddly tail risk, who can say, but broadly, there is no risk. And that will take some time, but broadly, we are going to buy the same. Why should we, if we have to buy new things, we have to only look at stocks that are down more than 10, 15% this year. There's no point in buying stocks which are up 10%, thinking that, now let's move to something else. So we will continue with our same two preferences out of our three normal preferences, which is IT, consumer, and financials. Right now is mostly financials and consumer.
Right. Samir...
By the way, just one line. I'm not talking about Ambuja. Ambuja is a sign of Adani. Adani is a sign of the banks. The whole thing is a sign of my market. So if you think that the FIs have to come back broadly, they have to buy into the whole package of everything is beyond the fall. I mean, in the sense, that doesn't mean they have to rebound, but that a major crisis is 90% or 95%, and whatever percent out of the way.
Yeah, and we've seen, Samir, previously also, in previous instances also, incrementally, when the market stops reacting with the same intensity to the same news flow, right? I mean, the broader market kind of does move on.
So that is why, you know, you have to give credit to people like me who have survived for 25 years. And we say to survive is to win. Because people get blown off, burnt out, can't take it anymore, can't sleep, can't watch Netflix. Of course, I also couldn't watch Netflix for the previous 20 years because there was no Netflix.
Said with a straight face, huh? Samir, I want to ask you about what's happening in the US. Do you think we are starting a fresh leg higher in the US? That the problems of higher inflation, etc., are now problems of last year, and there also incrementally the market will keep going up.
Are we starting a bullish cycle?
Yeah.
So there, you know, my thinking is because we have a fund there and it's up to 9-10% already this year because it has all these beaten up tech stocks. But broadly speaking, I think that they cannot go at this pace. This is their relief rally because their interest rates are still high and will remain high and will be increased by another 25 to 50 basis points. So it will be higher for longer. Normally, the rallies in the past happened when there was a cut because that rule came, not rule, but this thing came, don't fight the Fed and all that. So it came because of a long history of not fighting the Fed. And today, I think these days, this month and whatever may happen for the next few days is more a relief rally that, okay, now the end is somewhat visible. But there will be no cut and the rates will be 5% for at least 9-10 months and the bonds and all are even more. And so I don't think that they will have a runaway rally. We don't mind it, but I don't think they'll have.
Okay. Coming back to India itself, what other than, financials, you said you buy IT?
No, I'm saying normally we have these three sectors that we like, which is financials, consumer, and IT.
Okay.
These days, we mostly concentrate on financials and consumer.
Okay. Samir, from the financial pack, you've mentioned SBI. The other couple of banks that you would like, given that we've seen such a big correction.
They are not affected.
Yeah.
We have the same HDFC Bank, ICICI Bank. I'm saying they haven't hurt me this month. SBI, because yesterday it fell a lot, also gets involved with the same big picture, this thing on Adani or whatever.
And from the IT pack, I mean, at these levels, you've seen a big relief rally, but there's obviously that fear of a slowdown in the US.
We don't have it. We never thought it'll outperform the way it did this year. But now we are not going to have it for at least 3-4 months. And we'll see how it goes. Right now, our bet was, which hasn't worked in Jan because the US IT did well, so the Indian IT did well. And on a day like yesterday, when on the margin, the benefit should have gone to financials and consumer, it again came back to IT saying, oh, defensive and good corporate governance and, whatever, cash in the bank kind of a thing, which works, but we don't have it right now. So we are not going to buy it now on this basis.
Okay. Well, just a final word. There was one theory that India did very badly in the month of January, year to date, because foreign funds preferred China over India. Is that theme more or less over? Because Chinese stocks also have risen, I believe, a good 70%.
I think that thing was over, but now because of this Adani-related issue and therefore that issue related to banks, there have been some more selling, I guess. But I don't think that both these will there. So I still feel super bullish for this year, even in our long-short fund. I think we will catch up all this because these things will play out and you'll find that if the people are getting paid on time and everything is happening or maybe you have to slow down some future growth, but that's okay. In fact, it might bring more discipline to the group and everything, which is not bad, I think. So overall, I am still very bullish. Last year I was not, but this year I am, because that is the main reason. If US is doing well and China is doing well, okay, we can underperform China for some time, which we've also done now for 3-6 months. But doesn't mean we have to be down when the rest of the world is up. We don't have that bad a case for us then.
Got it. Samir, we've been asked to take a break, so let's do that. Thank you so much for joining us. It's always a pleasure. We'll have you back soon again. Thanks indeed.